Good evening, everybody. This is Harmeet from Sigma Picks. Thank you for tuning in. It is January 10th, Monday evening, and we are going to be looking at SPY, QQQ, and IWM. Let's get going. Let me just bring out my tools here, drawing tools. Okay. Just a quick recap. We were about here, and we were discussing. In SPY, at least, we were discussing this specific zone, okay, and what we were discussing is the fact that it was staying above this 473 level, which was very bullish, but we weren't sure, or at least I wasn't sure, that this right here was the end of the first subminutia wave, or was actually the end of minute wave. Right here, that, you know, 3, 4, and 5. If that, and I just wanted to show you guys that it can be broken down into 5 subsections, or 5 impulsive wave with 5 waves within itself. Okay, so that's pretty much where we were at, and we wasn't sure exactly what was going to happen, but that's the thing with understanding the fact that once they are consolidating or going sideways, it's pretty simple to just apply Darvish's theory and go from there. And what we saw in the last few days of trading days from last week and here on out is that we got a gap up above resistance, and we immediately failed, came down, retested, failed, and dropped out of the box. Okay, we went up, we couldn't even get to the bottom of the box again, and then we came right down with high momentum move into this 457, 454 area, and it is a little deep, to say the least. It is a little too deep to say, maybe that was a correction, but it still follows the rules of Elliot Wave theory, is the fact that it did not, so let me point this out, that it did not actually go through to the end of it. Okay, so if it had gone through and come down to 447, then we would have known that this was the end of the 5th subminutia wave, but it did not. So for right now, jury's still out. We don't know exactly how this structure will behave, but we can make out a 5-wave move down. Okay, and what we can expect is at least a 3-wave move corrective wave to be to happen, and that's pretty much what we're seeing. I don't know exactly how far we'll go, but if this was the end, or at the bottom, if this was the bottom of the 2nd wave, the only way we can confirm that is if we get through the top of this 5th subminutia wave. Okay, it's the only way to confirm it. Otherwise, we can still consider it to be in some sort of a consolidation or distribution zone. So let's wait and watch and see what happens. Just to want you to be aware that this is also a very big harmonic area. Okay, so we will watch it, see how this behaves, and maybe some harmonic pattern will develop, something of this nature. Okay, we don't know that yet. That's way out. So let's see how this goes, and we'll go from there. But for now, it's the best way to do it is just, at least for me, the way I'm going to be looking at it is just, I'm going to consider this another larger Darvish consolidation. Okay, we'll continue to monitor it for now. We can't make out if this was the actual 5th wave of larger degree, or 5th wave of the smaller first wave So we'll get more data and we'll hopefully have our answer soon. Okay, so let's go to the next chart. Next chart we're going to be looking at is QQQ, and just to quickly set it up, I was really focusing on this flag that was forming, and what I was trying to portray was, we expect the flags to break up, but that may not be the case because markets do tend to throw you a curveball. Okay, we were about here. We went up to the top of the trend line, failed, went up, and then gapped down below this trend line. Try to come up, failed at that gap, and that would have been a great short right here at that point. And then we ended up going through and making another low, a transient low, as I should mention, and that also broke down from this very important zone of symmetry, especially 377 zone, and we came all the way down to the extensions. Okay, extensions are, so let's just quickly point out what the extension is. So this is the high point and the low point of the Darvas box, and extension is this move extended from 377, and these are the values that you are seeing. Okay, so that's pretty much, we stopped at the top of the box today and reversed with high momentum, and also were able to close out this gap in one day. So that is very bullish, for at least for now, and we can expect this move to continue for a little bit, but just be mindful also again that this does have a structure of a 5-wave move. Okay, this is very stereotypical 5-wave move down. We should see a 3-wave move up, and hopefully, if not, see a 5-wave move down, trying to make some sort of double bottom or something, if this truly is the end of correction. Otherwise, you can continue to see this going down. Okay, so but for now, we're dealing with everyday things because the VIX is so high. You can't really say anything with any sort of confidence that something that this is, I can say with great probability that it is will go up. And usually when I see VIX over 20, that is a clue for me that probabilities are gonna go down of you just being able to predict or be able to say that certain thing, or be able to in a sense be able to tell a certain wave is done, or a certain consolidation is done, or the distribution is done, but we can't say that. So we are stuck in that zone, and I don't see it getting, at least not for a little bit, any better. But that doesn't mean there aren't tradable bottoms or tradable tops. So there's going to be lots of long and short opportunities that are going to be presented to you. So, but other than that, we're still in 4th wave. Okay, these zones become that much more important. The 368 to 364 zone becomes that much important. If we go below 362, that's another step down. We wanna, as long as we stay within this range, the 373, 362 range, I would say it's still bullish. Anything below that, we're getting into bearish territory, and not as the we may not see another high for a while. So pretty much what happens is, if you go up, oops, wrong tool, let me grab it. Let's say if you go up, okay, and then you come down, and then you go up, go sideways, and then go up. Okay, that's pretty normal. The pullbacks themselves really matter. Okay, the pullback, the deeper the pullback is, that means the extension may not be as far up. For example, it may go down right here, and that's pretty much what we saw in SPY too. I mean, I'm just gonna pull that chart back. You see this move back right here for in SPY. You see this move right here, how deep it was at 88.7%. So the move out of it wasn't as larger in magnitude, even though we didn't see that big of a move away from the last all-time high. And that's pretty much what we can expect when it comes to QQQs also. So these pullbacks matter. So what happens here is that, well, let's just look at this. Let's say if this pulls up to 88.7% or 78.6%, the pullback, it shouldn't be super deep because it's telling you there was a lot of buying or selling depending on where you are. If it's, if pulls down, pulls back up. Okay, so that would be bullish. If it pulls down to say 38%, that's pretty bearish, and reverse also is true. So that's pretty much what we're looking at. But this pullback is deep. It's out of the zone, so don't expect it to go and make new all-time high and that fast. Of course, anything could happen, but let's just see if it can get out of this 383 area, and hopefully, maybe we'll see if something develops from there. It was a good move, good reactionary move today, but that's all it was. Okay, so let's look at the next chart. Our chart is going to be IWM, and so last time we were discussing how it failed at this gap and it really needs to get through the gap, and it failed again, and we're seeing this reactionary move down again. As long as it stays in this Darvas box, that's all you really need to worry about. The bulls attempted a breakout, failed miserably, came almost to the bottom of the Darvas box, and we're now back into that Darvas box. So you don't even need, I mean, I am counting them just because I liked seeing if there was a large consolidation, how it develops. I think that for just to have that data is good, but for somebody, it gets really tough. Just understand this 234 and 207 is your Darvas area, and as long as it stays in there, I mean, that's what it is. It has to break out one way or the other. Retest has to pass, so that means it has to come back. It did over here, but it failed and went right through. It has to come back and show that there is some support stepping up and start moving up and take out the last high. That's when you know that it is actually bullish. And of course, it can do the opposite thing, and you will know that it is bearish. Okay, I hope this helps. The markets are never dull. Just stay proactive, stay mindful, and I hope you have a good day. Thank you very much.
Bye.
Have a good one. Bye bye.